that to solve the liquidity challenge, in the ASM market, perhaps we can look at ways of probably naming some market makers, to probably be dealing in these stocks. That might, if liquidity improves and investors know that when they enter these stocks, they can get out when they want. It's even encourage SMEs to come over to the market and list as well. So probably, should probably look towards that strategy as well. Another thing that could be done is probably reducing the tax, the capital gain tax and dividend tax rates, for stocks listed on the ASM, to probably encourage more institutional ownership of some of these companies.
Very great idea. Again, because everybody goes through the same corporate tax. But if you say, look, I'm on the alternative securities market where my tax is reduced, and again, that brings us back to the market in terms of the stock exchange, the SEC, and maybe others in the value chain. In terms of the costs of what the broker, the advisor, the reporting accountants charge. Issuer to broker to the issue, and solicitors and what have you. These are some of the costs that the SEC is saying, look, we need to reduce the cost of the market. That's one part of the conversation. Do you think the stock exchange, Nigerian stock exchange specifically, this time around, can review the listing requirements for these ASM and say, look, we can have a startup, for example. If I'm starting a new innovation, online shopping, platform, for example, a online travel agency that's been 1 year, 2 years in the news and is making some money. Maybe we can do a startup and include that there to encourage these new digital telecom folks get on that market.
Well, the difficulty in doing that is that although the NSE and SCC, they both have the mandate to bring more companies to the capital markets, they also have the mandate to protect shareholders from investing in highly risky securities. And for many of these startup companies, one thing you will notice is that they are still burning cash at a very fast rate. Many of them are loss-making. There are a number, Nigeria's e-commerce giants, for instance, the two big ones, they are still, loss-making. And typically, for such cash-burning companies, they typically require long-term, patient capital from venture capitals or private equity funds, not really, looking for capital from the public markets. They go to the public markets only when they are successful enough and they have enough operational history. And of course, they don't have the trace of survivorship. For instance, if you look at the US markets, the likes of Facebook, the likes of Snap, they were groomed for a number of years before they came to the public market to actually list. But definitely, there has to be a greater handshake between Custom Street and Yaba, which is Nigeria's, so-called Silicon Valley, to ensure that once these companies have gone beyond their early stage status and they start, getting into the growth or mature phase, they come to Custom Street to list, and then they are accessible to the public markets.
Well, a very interesting conversation we're having, and some of our viewers are on Twitter, and one of them, Ikpemosa Umuvabi at IKPEMS, says it's time to revisit the rules as it relates to listing on ASM. The rigidity is a great concern, and he also tweeted second and said reducing costs and increasing flexibility in rule making is very, very key. Do you agree with Ikpemosa on this?
I agree with him. I think for some of us in this part of the market, if you speak to most investment bankers, the major issue they have with trying to bring companies to list is that the requirements sometimes they are often too tight and not flexible enough. But despite this, like I mentioned initially, the SCC and NSA, they have to play, it has to be a fine balance between protecting investors, and trying to make the platform much more accessible to the companies to list, because you don't want to start going back to 2007, 2008 heydays of the equity markets. We had a number of companies who came to the market with very few operating history, questionable corporate governance structure, questionable risk management structure, and they came out to list and raise huge amounts of money. What happened in the end? When the bubble busted, many of them were delisted eventually, and investors got their hands burnt. And due to that experience, many had not, as risk-loving as they were before. So it has to be a fine balance between creating a very flexible platform for companies to list and ensuring that shareholders, and investors are, investing only in the right companies, who can protect, their interests.
Maybe a bubblegum stock market was not a time for the SMEs or startups to get into the game because you get trampled. I guess that was what happened 10 years ago. Because if you come to the market 2005, 2006, when the likes of Zenith, Intercontinental, back then, and Oceanic were doing IPOs, you get trampled because the big boys were on the street. Maybe when the market is a little bit quiet, as it is now, maybe we need to get the stock exchange and the SEC to take a second look at this again, because we have a few eateries, local eateries out there. We have a few travel agencies, online, whatever, that we can actually go back to again and say, look, this is how to get back into the markets. This is what it takes.
But another important thing is this: you also have to know the characteristics of your investment community. For instance, a typical Nigerian institutional investor or even retail investor is an income investor. He wants to invest in companies that are generating positive cash flow, that are already established, probably either in the growth, in the mature phase, or in the transition stage, where returns are guaranteed. So for many of these, startup companies, they are still more like early stage businesses, still generating negative cash flow, that do not have solid earnings fundamentals. And your typical Nigerian investor, we do not have
patience investors in Nigeria. That's a conversation for another day. I'm sorry to cut in there, but we need to get back to this. Why is it that we don't have patience investors in the Nigerian environment? Because that's very interesting. Everywhere in the world, we seem to have what we call bubblegum investors. You know what it is? You know how bubblegum is?
How does it work?
How does it work? When you chew gum, just blow it up like this and come back and it makes some sounds. Okay, let's leave it at that today. Let's just leave it at that. We'll talk about bubblegum another day. Omotola Bimbola, investment analyst at Afrinvest. Let's get back to the stock market and we'll look at the midweek opening bell from downtown Lagos in the next 2 minutes.